Top of the morning to you, traders. This is Chris Buss with Traders Profit Compass with your morning look at markets for Friday, April 30th as we wrap up the month. It is 6:44 as I'm starting the video. Quick look at markets. Oil down 1.6%. The indexes are all toggling between down about 0.4% to 0.7%. Little soggy. Gold and copper are flat. On the economic front today, we've got personal income and the Chicago PMI this morning. And we've also got Chevron and ExxonMobil on the in the energy sector reporting this morning. So those two big oil majors might be interesting to look at for the energy sector. So let's dive into this, and then we can talk about Amazon a little bit. That, you know, like all the other mega cap tech names, destroyed their earnings last night, got a big pop. They faded it a little bit so far, but nothing major. And then I've got a bunch of setups for you to get into, for you to set some alarms and stuff in your system. So let's quickly go through the indexes here. SPY 2 hour, we had the gap up yesterday morning. Then they faded it, filled the gap, respected this 416.25 area for support, and then put in a V bottom and right back up to the top. We can look at that on the 30-minute chart. Here was the gap up, fast fade, respected this support area at 416.75, and then V bottom bounce right back up to the top. So, I mean, that's a good example of a plain and simple technical gap fill, right? It didn't turn out to be anything other than fill the gap, take care of unfinished business, right? Gaps get filled at some point, whether it's sooner or later. And in this instance, it was sooner. So they took care of it right away, bounced it off support right back up to the top. So what started out as bearish price action turned out to be quite bullish. Why? Because we broke out of this range, 418. We said that was important, and we finished near the highs of the original breakout. So, I mean, that's nothing but bullish price action. Now for today, we're down a little bit. We're, opening, if everything stays, I mean, it's still 3 hours before the open, anything could happen. But, inside the range, I don't think there's anything to do. You can take a long on a breakout above the recent highs. I mean, maybe I could move that up to 420.50 if you wanted to be, super conservative, or right here at 420 where the bodies of the yesterday's candles ended up. Either way, anything above 420 is definitely bullish. I view the range between 418 and 420 as more or less neutral. If you got another pullback down to 418 that held, that's a perfectly fine place to take a long, with all this acting as support. As we discussed yesterday, what the bulls don't want to see are closes back below 418 because that will put it back in the trading range and possibly open up more downside. If you end up getting long ahead of the weekend, you can put your stop, just below your entry, just below 420 or wherever you enter. So you can, if you bought down here, you can harvest all those profits that you got on that on that beautiful entry. And, you know, speaking of those entries, just to go over our active trading sequence, opportunity to buy it, key support. We knew it was key support, you know, from here, from here, from here, from here. Here it held, or on the reclaim of the bottom of the gap, or the reclaim of 418. That would have been a good place to take a long. Let's look at the Qs. Not quite as bullish as SPY. Why? Because we gapped higher into the teeth of this 342 resistance, got rejected, came back down, found a little support, and put in a small bounce. Let's look at the 30-minute chart. Here was the push into resistance, rejection, smackdown, took out this support area, came back down to this 337.25, which was a layer that we had marked, and got a bounce up to 340. Now, today, I think it's clear. 340 is your pivot. If SPY breaks above, you can be long and look for 342. But while it's below, I think you got to look at 338.50 and then 337 as possible downside targets. You know, and I find it interesting that, you know, all these FATMAAN names blew it out of the water, yet the market cap weighted index of QQQ can't break out. I mean, I think that's interesting. You know, we had Amazon up $100 last night or more initially until they faded it a little bit, but the Qs didn't even react at all. IWM, kind of similar to the Qs in the fact that we had this fake move higher, then back into the trading range below 229. They even took it lower. We had a gap in here that I've since taken out. Here are the levels of that gap. And as we talked about yesterday, this layer here at 225.50 is now a nice layer of support, or should be. It was resistance here, here, and here. And since we've broken out, we've come back one time where it held. So today, I think your pivot is 228. Above that, I think you can be long. And below that, I think you can be short. And if you are short, the critical spot will be 225.50. If it breaks that, probably come down in here to the 223s. Let's look at the 30-minute chart. Here you can see the technical action, and here we have the gap that was that I left in there. So I'd key off this level. If it can hold this old trading range, then I think there's an opportunity for 229.50. But if it can't, I think there's a good chance it comes back down to revalidate these lows and give these lows one final test if it's going to hold and go higher. Before we get in the FATMAAN names, if you're new here, certainly appreciate your time and interest. I hope you've appreciated the commentary so far and the levels, so you can fine-tune your active trading around them and focus on your execution. Please hit the subscribe button and the like button, and that way you'll get all my content when I publish. Also, over in the show notes, there's a link to where you can register for all my content. I quite often send out things during the regular session that never make it to YouTube. So trade ideas and stuff like that. So you want to register, and when you do that, I will send you a link to our trading room where you'd also like to take advantage if you're interested. And longtime subscribers, please hit the like button, pass the link along to a friend, and leave me a positive comment so others know that you appreciate the content. Facebook, gap up, baby fade, finish at the highs. Very bullish price action. So now we've got a bracket trade between 331 and 321. As long as you're inside that bracket, you can either try to fade the high and buy the low, or wait for either a breakout of the range or a breakdown into the gap. And those are well-defined areas. If things are going to get soft, I wouldn't be surprised if Facebook came down one more time to this 321 level and then held there and then moved back up. But that's all speculation. Just go off the levels. You've got a nice level here at 331, and you've got a nice level here at 321.61 to shoot against. Apple, we went over it yesterday afternoon. Opening gap higher, out of earnings, into the teeth of resistance, faded back down into the trading range. In the pre-market, it's down here around 133. I would not be surprised if it finds 130, 150, and then that would be a great location to try along if it looks like it's going to hold. And if it doesn't, then you're quickly stopped out, and then you got to get on the short side, because once it loses this trading range, and it's let's see, it's $3.50 wide. So if it breaks 131.50, you're down here to 128, and to fill this gap. So that's a really important level there at 131.50. Tesla, these levels worked great in the pre-market. It's teetering in the 670 range. I view that as a major pivot. You can see over here how important it was. It held and then moved higher. I think it's got to hold 670, or else it brings 625 into play, and probably lower. Notice we've got this big gap here between, let's just call it 590 and 560 that is yet to be filled. And if this starts rolling downhill, I think that gap provides a natural target. So watch 670 really close. Microsoft had a negative earnings reaction, gap down, back test of the gap, then it let go yesterday and had a little bounce into the close. I think you can use 252 as your pivot. Anything above that opens the door for 254 and possibly 256. If this rolls over from 252, then you're looking at 250 and then 247 as your downside targets. So I think this one is fairly straightforward and simple. So use 252 as your pivot point. Amazon with its gap up, I have it trading when I started the recording at 35.40. It had hit, 36.67 as a high last night. You may want to mark that level, 36.67. And now it's at 35.40. So whether you decide to trade today's price action, for the rest of us, we can set up a bracket trade around today's high and low, and then we'll have second day bracket trades on Monday to follow going forward. And then we've got this $50 gap below, or whatever it is, around $50 gap below to fill. So I was just flipping through Twitter, and there seems to be the opinion that Jeff and Mackenzie Bezos always sell after earnings. So whether that's true or not, I don't know. We didn't get the stock split that everybody was talking about and hoping for. So if they have sell programs in place to sell after earnings, then you may see this thing faded, into this opening range. And remember, it's Friday, so be on the watch out for a downside runner as a lotto pick, and maybe you can get $150 move out of Amazon after earnings. But just remember, most lottery tickets end up worthless, so only bet what you can afford to lose on those things. Google. Here I've set up the bracket from the gap up, had a little pullback, and now is in the middle of the range here at 23.90. I think you can use 23.90 as your pivot. Anything above, you can be long to the top of the box, and anything below, you can be short to the bottom of the box. And then if you get a break into this gap, then you've got another $50 of downside here. And if you're long and then get the breakout, you're in blue sky. So that's a nice, well-defined bracket trade for you to watch on Google. Another bracket trade here on Netflix that we've been watching. And see, this is what normally happens on these bracket trades. Once that opening range is defined, it takes a while for the price action to resolve. Now, in this case, that range is $15 wide, and that's plenty wide to trade, buying at the low side and targeting the high side. That's a nice trade. That's a $15 trade. So if you're not interested in that, you can just set alarms at 5:15 for a break above into the $35 gap, and set an alarm below 500 if it breaks down, and then you've got your downside opportunity. So in earnings season, it produces a lot of these gap higher or gap lower where you can set up a bracket trade. Last night, Twitter gapped down about $10. I guess everybody concluded that firing Donald Trump might not have been a good idea because they lost about 1 million active users on that move, I guess, as everybody, quit the platform. So they missed some of their numbers. There's going to be a trading range set up down here. Notice how important this 54 level becomes, because you've got support here, and you've got the 200 coming in here as well. So whether you decide to trade it as a bracket or not, that's an important downside support there at 54. If it were to break below, then you've got some substantial downside. Just eyeballing it here, looks like it could make 46 as a downside target. But on the upside, if it gathers itself, you've got a gap up to 65, 66, and that's a nice trade in itself as well. Skyworks, $15 rug pull after hours to come down and test the 50. Pull that up. I would use a 60-minute chart because it's just easier to see. Pull that up, set up your bracket, the top side of the range, the bottom side of the range, then you'll have a nice bracket set up for Monday and next week. Same thing with Western Digital, up about $7 last night after earnings. You can see the pattern here, quick move up, consolidation, quick move up, consolidation. Now we've got a gap higher on earnings. I wouldn't be surprised if this oscillates and then moves higher on a gap and go kind of setup. So put that on your radar for Western Digital on the gap higher on earnings. Pinterest was the one we flagged yesterday or the day before, I'm not sure. I think it reported on Tuesday night, I guess. This is Wednesday and Thursday's action. You've got a nice bracket here between 69.50 and 65.50. In there, you can play that $4 range with an alarm at 69.50 for this $8 or $9 gap higher should it move into this range. And if it moves below, if it breaks below this trading range, you've got a lot of downside. You can see the volume over support literally disappears below 65.50, and there would be a big vacuum there. So definitely mark the downside, even though you may be optimistic and bullish. You don't want to miss that downside move should it break. And here's another one, Peloton. Sitting on a ledge of support here at 97.50. Below all the moving averages that are tilted down. Here's the your 8-day, 20-day, 50-day, all bearishly aligned. And now the moving averages are moving below the 200. And price is already below the 200. It wouldn't take much of an imagination to draw a head and shoulders top here. I haven't done that, but you certainly could. I think if you break 97.50, you're certainly coming in to 90 and possibly even 80, and then we'll have to, assess from there. But I think you got a very objective level here on Peloton going forward. I don't know when they report. They may have already reported. I'm not sure. Please check that before you take a position. But I think putting an alarm here at 97.50 would be a good thing to do and give you a very objective trade location. Regardless of if it holds a bullish setup, and if it fails, definitely a bearish setup. So let's wrap it up there. Friday afternoon is important. Why? Sets up risk sentiment for the weekend. Are traders more than willing to be buying on a Friday afternoon? Or with the extra weekend risk, are they skittish and selling? So I always like to look at that final 2 hours on Friday to kind of gauge risk sentiment going into the weekend. And, we've had the FATMAAN names in the crosshairs because they are so important with their cap weighting. And I want to watch Amazon carefully this afternoon after its stellar report. I mean, how much better can it get, really? And I think that may be what some traders are thinking. I mean, these numbers have been blown out to such an extent. Can they ever be beaten again, or at least in the near term, as we come out of the pandemic and kind of get some normalcy back to our lives? Is everybody just going to be sitting inside ordering on Amazon? I don't know. But let's watch the price action. That's all that really matters. Everything else is speculation. So have a good day of trading. This has been Chris Buss of Trader's Profit Compass. Thanks for watching. Talk to you next time.